In Finance Minister Tito Mbowene's budget speech, he spoke about broadening the corporate tax base. Let's explore this as well as other issues to do with the tax brackets and the much-punted benefits from those. I'm joined now by Director and Head of Corporate Tax at BDO, that's Marcus Botha. Thank you so much, Marcus, for coming through. So let's start right there with the broadening of the corporate tax base. What was he talking about, and why is this something that he believes will generate revenue for the fiscus?
So we've got three main tax categories that we can collect revenue from. We have the corporates, the individuals, and indirect taxes, which is mostly VAT. And if you look at what consumer spending has been over the last 2 years, and also where our economy is going in terms of the economic growth rate, there wasn't much room because that would not have contributed to the tax pie in terms of revenues. Individuals, we couldn't go anywhere near them because if you start looking at the latter curve and where we are on the curve, we've kind of on the cliff falling off if we push up individual tax rates any higher there, which left us with the corporates. And there's been lots of rumbling by public and other stakeholders that there's a disparity between what the individual pay and what the corporates pay. But you cannot increase corporate tax rates because it doesn't make us very attractive as an investment. So what they did was actually very clever, and I like the strategy. We are going to broaden the tax base by looking at any connection that you have with a non-resident or foreign income. And there's two main measures that came through in the proposals. The first one is they're going to limit interest deductions. And that's on net interest, which means a lower deduction increases your taxable income. So we're creating a little bit of an artificial taxable income there. Yeah. And the other main one that came through, which was very surprising, was we're going to limit the application of your assessed loss. So if a corporate is in a loss position and they do generate a taxable income in a year, you will only be able to apply 80% of that loss, which means it creates taxable income and revenue for the state coffers. So
let's talk about looking for any links you have with a non-resident entity, I presume, or income, whichever way it comes. How big a pool does that create for us?
So the big pool is more on the assessed loss side. So if we look at the mix of corporate taxpayers in terms of size and how many contribute how much to the revenue collections for corporates, you have 0.1% of the corporate taxpayers that have a taxable income of more than 100 million. That number is very small. That's the largest taxpayer. But as you move down the scale, they're the biggest contributors in terms of what is sitting under the assessed loss bracket. So assessed losses in terms of the corporate profiles is about 27% of companies, and we have 3.2 million registered corporate taxpayers, of which 800,000 was assessed.
Making losses?
No, just the number of assessments.
Okay.
The rest are either dormant or not trading, or they haven't filed their returns, or they are in a zero taxable income or assessed loss position. And the zero taxable income and assessed loss position make up about in excess of 65% of those corporates. So there is room to maneuver and to play with in that bracket. So if we start applying the limitation of the assessed loss to those corporates, it's going to generate taxable income.
All right, let's go back to that big debate, though, that South Africans raise from time to time. 28% the corporate tax rate at the moment in the country, and it's been like that for years and years. I heard you earlier on saying that it doesn't make us really attractive as an investment destination if you decide to raise the corporate tax rate. But someone will say, we are in an unprecedented situation. We've had to raise VAT. That was not popular, but it had to be done. As we speak right now, in terms of trying to realize savings, we are cutting down on spending on things like housing, roads. So why should the corporates not be touched?
But they are being touched because these two significant proposals will generate significant revenues for the state because there's a lot of assessed loss or zero taxable income companies there. And if you're going to limitate the application of the loss, it's going to generate taxable income. So they are being touched because that corporate base, income tax base, is being widened. Plus, the measures that's being introduced where there is a link with a non-resident, where we're going to limit the interest deduction, that's also going to add to it. So the position that the corporate is in now is going to be very different with these two proposals. They're going to be paying more taxes.
Lastly, Marcus, before I let you go, talk to me about the impact of some of these measures, these new tax measures on small businesses, small and medium enterprises. What's moved, what's shifted by way of easing the tax burden on them with the hope that, they contribute to the fiscus?
That is a very underexplored area, and that was one of the areas that I expected slightly more traction on the budget speech. Your small, medium enterprises are taxed on either as a small business or as a micro business. And for both, there's a marginal scale. But if you then compare that to the ease of doing business in South Africa, there's a complete disparity there. And small business owners cannot absorb that cost. It has a real impact on them. And I think maybe something that should have been looked at is a progressive tax system for the smaller businesses, similar to that which we have for individuals. I think that could have brought some real relief.
So in simple terms, our lack of ease of doing business means that there's a cost to it, and therefore we needed to be considerate of that.
We definitely need to be considerate there.
All right.
Because if you look at, not a small business can't necessarily afford a tax practitioner to help them with tax planning and make sure their tax affairs are in order. It's complicated. And if you're not in a position to actually leverage off something like that, it comes back to the business owner. We need to make it easier for them. And I think looking at the tax system there could bring some relief and make it easier to do business.
Marcus, thank you so much for coming through. Marcus Botha coming through and talking to me about some of the corporate tax proposals from the Finance Minister Tito Mbowene's budget, which was delivered earlier on this week. This is Upfront here on ENCA, and still to come.